My name is Anthony Fatsis, and welcome to the What the Finance podcast, where we interview finance, trading, and investing experts to help you understand current market trends and learn about the intricacies of new and existing assets. If you enjoy the podcast and to help with the YouTube algorithm, please like, comment, and subscribe. It really helps with the podcast. That means we can continue to get amazing guests. Thanks again. I hope you enjoy. Tom, thank you so much for joining the What the Finance podcast to talk with me today. So sort of on to my first question. I've sort of been looking at a lot of the things that you talk about, and it's about like sort of a debt crisis, and you're a little bit concerned about what's happening in the US. Can you maybe just expand a little bit more on that?
Yeah, I know a lot of people kind of look at the gold and silver market and they try to chart it or they try to time it. The way I look at it is a little bit different. I look at the debt load and how that will move the price of gold and silver over time. And you can kind of look at the US debt ceiling over time. Every time it goes up, sooner or later, then gold will track it higher. The problem we're running into, when you look at our debt load now, we're sitting maybe close to 29 trillion. At the current pace, by 2025, we'll hit 45 trillion. And the problem you run into it, everyone keeps saying, it's not a problem, it's not a problem, it's not a problem, because, guys have been saying it for 20 years. In a year or two, the debt load is going to kill us. We're all going to blow up. The whole system's going back to gold. But one of those days you have that, like the straw that broke the camel's back moment. And it's that one last piece of debt that comes in and everybody says, oh, don't worry about it. Hasn't happened in 20 years, and then it happens. And you look at history, it's happened all through history. Every fiat currency that was created, eventually this happened to. You look at the Weimar Republic, there were guys there that were as wealthy as the owners of Facebook and Google. And 4 years later, if they held their money in their country's currency, they were basically broke, trying to find money to buy bread. And we also saw those pictures from Germany, people walking down the street, wheelbarrows full of cash to go buy a loaf of bread. At one point towards the end, and this all happened during a 4-year period. That's the part that's so crazy about it. Everything's going good. Everything's great. Everyone's kicking the can down the road. And then over 4 years, inflation just went into hyperinflation and destroyed everything. And that's how fast the destruction happens once it starts to fall apart. At one point towards the end, the Weimar Republic was running at like 29,000% inflation per month. How do you survive? There were situations, I think I heard stories where they had like coffee houses there and they kept the prices on a chalkboard because they were changing while people were sitting there eating. And that's how, and that's the problem you run into when you continue to print dollars that aren't really backed by anything other than the paper. Sooner or later, the world gives up faith in that currency, and then you got a big problem, and it snowballs fast. The United States, the debt we've run up just over the last 20 years is staggering, and then you look at the last 10 years, it's even more staggering. I don't see any stopping it. No one's really saying that's a problem, and that's the problem. They're just going to keep spending. And at some point here soon, between now and 2025, you're going to reach a point where you're simply selling U.S. treasuries to bring money in just to pay the interest on the debt. You're not even paying down any part of the debt. You've given up on it. And then harder choices start to come in. You cut programs. Some people say have almost been brought up on a program where they've had an entitlement program most of their life, Social Security, disability, one of those. What do you do to those people that you've trained them? The government's going to take care of them for decades. And then one day you wake up and the government's running out of cash. And that's where society runs into a big problem. I know some people have more of a cataclysmic outlook. I don't. I think the United States is full of a lot of really smart people. I think the West is full of a lot of smart people. The current fiat system will destroy itself, and it's going to do that fairly. I would say you look at the next 5 years, there's a good chance that we lose our reserve currency status. And then after that, I think you run into a big problem with the U.S. currency. But that's not the end of the United States. We'll go to a different system. If I had to guess, it'll be a basket of currencies put together that will back a currency, a group of commodities put together that will back a currency. Gold will be one of those commodities, but I think it will be a basket of them. And that way, it'll be a hard asset. And that's what I believe is going to happen over the next 5 years. You're going to start to see the whole world come back to hard assets and get away from the smoke and mirrors. It'll really come down to, do you have any intrinsic value in your currency. And if you do, then the currency is going to be stable. And if you don't, then it's going to drop. And that's how it should work. I mean, a strong country should have a strong currency. A weaker country should have a weaker one. And that's supposed to be a balancing system. The weaker currency then allows that country to export more cheaply, and that supposedly would then, spur their economy on. The other country with the high currency, that means their economy is booming, and that makes their exports more and more expensive, which hopefully would then slow them down and slow their rate of inflation. So it should be a balancing act when it's done properly. Right now, I think it's a little out of whack because we have this ability where the Fed can just spend every penny they want. And someday it'll be looked back as one of the most ridiculous systems ever. I mean, you look at quantitative easing. You sell U.S. Treasuries, no one buys them, so then the Federal Reserve buys them. And granted, they're not a part of the U.S. government, but they're at an arm's length. And we give them the right to control 100% of our money supply. So you say then, okay, well, how did they buy it? Well, they just turned the printing press on, they sold dollars, and they bought it. That is a crazy system where you can actually monetize your own debt. If the normal person could do that, they would never stop spending. You'd buy a new car, and then next month you'd go downstairs and print more cash, and you go on a vacation someplace. You'd do it forever, but it just doesn't work that way. Sooner or later, you have to come back down to a more of a real earth where people look at it and say, okay, what's the real value of that thing that's backing it? And that's where I think the opportunity is in commodities, and especially gold and silver right now. I tell everybody, don't try to time the gold and silver market. You're going to fail. Everyone's failed through most of history at it. Just try to go in monthly and buy monthly so you average into it and just keep adding to it right now. This year, gold and silver hasn't really done anything. Last year, it was, everything was booming. So this year it kind of cooled off. But that's good. I mean, that gives you a chance where you're going in and you're adding to your investments monthly and just keep stacking it up. And then, well, sure thing, what'll happen, we'll take the next leg higher. And that could be coming soon. I think the fourth quarter should be pretty good for gold and silver. The debt crisis is going to come to a head here pretty quick. They're going to have a pretty good sized fight over the debt ceiling, I'd say over the next 45 days. We hit the debt ceiling a little bit ago here, but the Federal Reserve had some ways they can maneuver around and use cash from different areas. So far, it hasn't been an issue. But that comes to a head, I would say, about the middle of October, where they're going to have to do something or they'll face default. They're never going to default. That's ridiculous. So it's just going to be political posturing. But they're going to fight over that debt every day in the news. And that's going to put a lot of pressure on the sellers of commodities, and people are going to start really buying gold and silver. And then when they do bump the debt ceiling, that's another thing. I think people are going to look at it and say, okay, we're up another leg. And then what happens when they hit the debt ceiling? It's kind of ridiculous to even call it a ceiling. If you bump it over and over and over again, it's not a ceiling. I guess it's just the debt level. And sure enough, when it comes up to the next one, I'm absolutely positive they'll bump the debt ceiling again. So that's an issue, and I don't think anybody's addressing it. They're talking about another $3.5 trillion worth of funding, spending that's coming, this another package. And the problem I see here in the United States right now, if you notice what's happened with the price of natural gas, has gone through the roof. Now, where I live at in the Northeast United States, you look at food, gasoline, and now natural gas. All three have gone through the roof. Now, nobody can get away from those three things. You got to drive your car someplace. You got to eat, and now the final leg of the thing is you're going to have to heat your house. Literally, it'll start snowing some years around Halloween here, and some years at Easter, you'll get one final snow. So people don't have any choice. Now, when you look at that and you say, okay, they're going to pay their bills, they got to pay those things because they have to live. That means discretionary income is going to start to dry up. And as that dries up, the government's going to have to make another decision. Do we send out another stimulus check, which is going to add, if you do $2,000 a person, it's probably going to add $850 billion to our debt immediately. Or if they don't do that, then consumer spending is going to fall off the ledge, and the economy is going to go into a tailspin, and then you got another mess. So I think you're going to run into that situation late this year, early next year, where discretionary income is going to just dry up. And that's when I think you're going to have another big chunk of debt come in, because I think what they'll do is they'll probably cut another check. That'd be my guess.
Yeah, definitely. I think one thing you sort of mentioned there is obviously it sort of reminded me of Bretton Woods. If you think about what happened with Bretton Woods, sort of people lost sort of faith that the US could pay back. They could actually pay back the money, which was true. So it's almost the same thing. It's like, hang on, why would they? Why would people continue to use US dollars? Why would they continue to borrow if there's an unlikelihood that they can actually, pay back the debt?
That's a big issue for the economy. As soon as they lose faith in you, then all of a sudden credit dries up. And credit dries up, and then the economy dries up, and you go from, that's how recessions turn into depressions. And that's the part you got to be careful of. And I think what will happen here in the United States, I think they're going to run the debt all the way up to the point where it's ready to just blow apart. And we're going to have that Weimar Republic moment, but we won't actually have it. I think at that point, they'll blow the system up, and then they'll initiate the new system with some type of a commodity basket, backing of hard assets. So I don't think we're going to have that moment where it all just disintegrates, but it's going to be really volatile. And I'll tell you, people are going to have probably their lifestyles changed a little bit in the meantime, because it'll be a bumpy turnover. It won't be easy. And I would expect a lot of market turmoil. And that's where people, even if you're a stock guy, you just love having all your money in equities. That's fine. I mean, you've gotten a lot of money in the last 20, 30 years. In the United States, we all got in the brokerage business back in the early 90s, and everyone said, hey, what a lucky person you are, because look at the baby boomers, look at the demographics. You can't lose. Just go in, get your clients. Even if they buy the S&P 500, they're going to make a lot of money. And they did, of course, because they just tracked that demographics. But now that group is all heading into retirement. So if you have that happen, and that takes away equity buying, and then all of a sudden you get chaos from a debt problem, you can have a real problem in the stock market, and you could see 30, 40% chop in a hurry. And again, where's that money going to flow? It's probably going to flow into hard assets. So gold, silver, platinum, palladium, fluorspar. You look at the strategic minerals with the electric vehicles coming. I don't see how you could possibly lose with nickel, cobalt, lithium. Any of those things that you can just buy and stick away and say, I'm going to hold on to them, I would. Now, it's pretty hard for the normal person to hold physical lithium. So in that case, you're probably not going to. You're going to have to buy some type of an ETF or a fund or a company. But when you're talking gold and silver, platinum, I would do everything you possibly could to buy physical metals and then order out delivery so you have it in your hands. Because a lot of people will buy physical metals and then they'll have them held in a safety deposit box at the bank, or let another depository hold it. Well, what good does that do you in a crisis? Because they're never going to release it to you. You've got to have it in your own hands. So I encourage people, put a small safe in your house. Do whatever you have to do, but keep it in an area where you have availability to it if you need it. But always order physical metals. I wouldn't buy the ETFs. I occasionally trade Nugget, NUGT, because it's a leveraged fund. So I'll use that for trading, and it's paper. So I know what that is. It's just simply a trading vehicle. But I wouldn't hold it long term and think that you have your balance in place, your inflation hedge in place, because you really don't. It's still a piece of paper. It's only backed by paper. It's not backed by physical assets. And what they found is, most of these ETFs, with the exception of Sprott, I think PSLV, the rest of them aren't backed by much of anything. It's fractional gold or fractional silver. And that means somebody deposited a bar of gold or silver in the vaults in London, and then they turned around and they sold that same bar to 1,000 or 10,000 other people. So you really don't own anything other than just the paper. But if you can order out your own physical metals, do that. If you can buy into maybe a group of people get together and you buy into your own mine and you buy a piece of it, you buy 10% of it, you buy 20%, that gives you, a supply rate there that you can work on. Those are the best ways to go long term if you can do that. The normal guy probably isn't going to do that, but I mean, you can still buy your own physical metals and send them out. Once a month you buy it, they send you out one bar, they send you out one thing of silver, you stack it up and you keep stacking it. That's the way to get through the tough times, and then things will get back to normal, and we'll just have a new system and go forward from there. But I think the next 5 years, there's a good chance we may see the end of fiat currency as we know it anyway.
Quite interesting, because I know a lot of people who maybe support the spending are saying, not all of them, but some of them are saying, it'll just inflate away. As the currency devalues, there'll be higher inflation, and then you inflate the debt away. Is that something that you see could be a possibility, or? too much. So
It's
too
just
much
impossible.
spending
Yeah.
compared to the inflation.
Yeah. I mean, and again, you can kind of, there's only so many pieces of history you can look back. Everybody always looks back to the Weimar Republic. I think it's going to be another one of those moments where just, that straw that broke the camel. People are going to say that and say that and say that till the very end. And they're going to say, whoops, I was wrong. Sorry. But what's that do for the average guy on the street, who's now in trouble? So I would prepare now. At the very least, gold and silver are great investments anyway. I mean, last year they were one of the top performing sectors all by themselves. But if you run into a situation where you've got a problem, it could be a life-saving event for your family, not just an investment. So I think you win either way by investing in gold and silver right now. How you could possibly inflate it away, I think it's impossible, because the inflation will have a whole series of problems that come with it, that's separate. And then all of a sudden it starts to snowball. So inflating it away or monetizing it away, I don't think it's an answer long term. I just don't think they can do it. I think they can tell everybody they're doing that and kick the can as far down the road as they can. And if they could stretch the disaster out instead of 5 years out to 10 years, that's all they're trying to do. They're trying to buy as much time as they can and then ease themselves into the new system. So it's not a chaotic, emergency, like it looked like when we were leaving Afghanistan, just an absolute mess. People die, falling off of airplanes. You don't want to have that moment in the economy. So you want to push it out as far as you can and then try to make the transition as seamless as you possibly can. And they'll probably come out and sell it to us like they're doing us a favor and they're saving us. And even though they're the ones that have spent the thing into the ground over the last 30 years. But
Yeah,
that's
it's what they do, isn't it? They always, we're going to save you, we're going to save you. But yeah. And I think one thing that you hear is, they always say it's going to be different. That's quite a common thing, isn't it? That each time it's tried, they say it's going to be different, but then don't learn from history.
It's amazing. The longer you're attached to markets, you see it over and over again. As soon as someone says, I think Janet Yellen said one time, hey, with our new system, we're never going to have a recession again.
Yeah.
They thought for some reason the last 100 years, whatever, they figured it out smarter than anybody else did. It just doesn't happen. It eventually always comes back to its mean. Early last year, we bought a lot of silver. Out of our mines, we typically take about 50% gold, 50% silver, but we also went out and bought some physical silver also. At the time, the ratio, gold and silver traditionally trade in a ratio to each other. And for some particular reason, gold outperformed silver a great deal. And silver was lagging down at like $13. And nobody was buying. It was just dead in the water. But when you have a situation like that where it's so far out of whack with the historical norms, at some point in time, it's going to tighten. And sure enough, silver turned around, went from 13 to 30 in the blink of an eye. And that happened in like a 2-month period. And that's all that really was, though, was they were tightening it back up to the normal ratios that they've had throughout history. And a lot of people were saying the same thing then. Oh, it's different now. It's not the same. The ratios don't matter. And you hear it over and over. When the internet economy started, they said the same thing. Oh, it's different now because of the internet. It's not. Sooner or later, it'll come back to its historical norms. Sooner or later, the S&P will come back to doing about 10.5% a year, because that's what it's always done. And that's a bad sign for right now, because we've had years where it's far outperformed 10.5. So that tells you you're going to have a couple of years where it badly underperforms and you come back to the average. But long term, that's what a person should expect out of the stock market. 10.5, 11%, good quality return. You probably double your money every 6.5 to 7 years. Perfect. But you got to ride through some of those years where the market drops 30%, and it evens out some of those years where maybe it went crazy and went up 40 or 50%. Just don't get too high, don't get too low.
Yeah, definitely. And I remember I spoke to someone recently, and he was saying that finance the knowledge is very cyclical. So it's almost like people go through, they go through the boom and then the bust, and they almost forget about it, and they go, and they forget what happened the last time, and they just, think, oh, this is great, it's different, and then the same thing happens again.
But people are just a glutton for punishment.
Yeah, I think obviously that's why we do it. Yeah. So one thing that you've mentioned as well is sort of the Fed. They're almost trapped in sort of a corner. They can't really do much, and you think there'll also be sort of supply chain nightmare as well. To avoid being too doom and gloom. But can you maybe talk a bit more about that?
Yeah. The problem the Fed's got right now, where they're not trapped yet, but it's close. If stagflation really takes hold, now you have a situation where the Fed really wants to raise rates to defend the dollar, and also because they want to start tapering on their quantitative easing. But they're in a situation where the economy is teetering on the edge of recession. So if you raise rates, you pull liquidity out of the market, you run the risk of pushing the economy from a recession into a depression. So it really backs them into a corner where they can't do anything. And we're pretty close to that situation. I mean, when you go into the grocery store and see food prices going through the roof, when you get your natural gas bill at the end of the month, people are going to start to see these problems emerging. And I don't think that we have a situation where the Fed has been pretty agile at finding new ways to get around problems. But a situation like that, it makes it very hard. And the way I see it happening is the Fed would be forced to then not do anything. They might even have to flip around and do quantitative easing again, or even try to cut interest rates further again to keep us out of a depression. And when that happens, the dollar's going to tank. And that's why, from a gold and silver point of view, as the dollar goes down, gold and silver should advance quite a bit. And I just see no way that we get around that, because if you have a stagflation situation, even if the Fed tries to taper and they try to raise rates, my guess is it'll be a knee-jerk reaction, and the market will drop 20 or 30%, and the Fed will then rush back in to save us, and the whole thing starts over again where the Fed's stuck now. And in that kind of a scenario, I see no way that the dollar stays up. So you've got several problems coming right now. One is the debt load, but also you've got the situation with the stagflation where the Fed may not be able to do the same things they've done in the past. And if you run into a real currency problem, that's an issue here because we haven't had that before. We had the debt crisis a few years ago. You could spend your way out of those things. When you run into a deep recession, you can spend your way out. How do you spend your way out of a currency debt crisis? Adding more debt isn't the answer. So then you're in a tough situation. So the world will tell you, just what the IMF has told people, you're going to have to go through a period where you tighten your belt, stop spending. So then you stop spending, and that drops economic activity even more. And it's this spiral that you can't get out of. And we're not far from that kind of a situation. And that's why the stagflation part is very dangerous to the Fed. And I'm sure they're trying to maneuver their way around it. But if you see some of the problems that have been going on in the repo market this year, I think they have a systematic problem inside of it right now, and they can't figure it out. So their only answer is keep throwing money at it. And they did that last year and it worked. But it's just every year they seem like they're putting a bigger Band-Aid on it. So there's a problem inside that repo market they can't quite figure out yet. And their only thing they can do is keep throwing money at it. But sooner or later, you're going to have to face reality. And the reality is we've got a big economic problem, and the Fed's getting themselves backed into a corner. And that's going to be a real issue here in the next, I think probably in the next 12 months is going to be an issue. But over the next 5 years, it's going to be a huge issue.
Yeah. So can you talk more about that? Because I think there's been liquidity issues, haven't there, in the repo market recently?
Again, you hear a lot of different rumors why they're doing it, why it's happening. But I think they got up to the point, what were they doing? Over almost $1 trillion a day,
I think so, yeah.
Maybe $1.5 trillion. And you ask yourself, okay, in a healthy economy, why would they need to do that? It doesn't make sense. And yet they turn around and they tell you, well, the economy's so good, we could start, tapering, maybe raising interest rates. To me, that just sounds like smoke and mirrors. If you've got a big problem that you're throwing $1.5 trillion a month at, or more than that, but on the other hand, you're telling us the economy's so good, you're just not telling the truth. I don't have an answer why they're doing it. My guess is there's got to be a systematic problem inside of it, and the smartest minds in the world can't figure it out. So I certainly can't. But they're giving you the signs. You see the red flags. No one throws that much money at something unless there's a big issue inside of it, and it must scare the Fed quite a bit. And everybody talks about what's the next black swan event. Well, it's usually something no one's looking at. That old saying, you don't get knocked out by the punch you see coming. And the one we don't see coming, it could be the repo market. Whatever's going on there, that has the potential to blow apart and cause a huge market problem. And the way that would happen is you'll just wake up one morning, something will happen overseas in Asia, and it'll spiral, and you'll look at your market and say, geez, why is it down 1,800? And then it'll be something to do with the repo market. But my guess is they've got a big problem there, and I think they're trying to keep it quiet, but they're leaving clues. I mean, you spend that much cash per month. I mean, that's leaving a pretty big clue for somebody to look at.
Yeah, definitely. And do you see this as an issue maybe only in the US, or is it something you see maybe worldwide?
Yeah, I think if it happened to blow apart where it was a huge problem here, it would spread instantly. And it could even start initially in China. I mean, China's got some serious debt issues of their own. But typically, what would happen in the old days, one country would have a problem, and then it would spread. The emerging markets would get smashed first, and then the whole economy, the worldwide economy would suffer. I think it's a global issue. The repo problem, I think that's specifically right now a U.S. issue, but I think it'll turn into a global issue if it blows up here. So that's a problem for everybody.
Yeah, I think we saw in sort of 2008, everything's just intertwined, isn't it? So if anything happens in the US especially, or even China, then it just sort of echoes throughout the world.
That old saying, when we catch a cold, the whole world gets sick.
Yeah.
Now you've got a couple of big powers there. You got China and the United States. So if either one catches a cold, the rest of the world might get sick. And I think the Chinese, their banking system is a nightmare. And I tell you, it's a very unfair system. Also, we buy gold, silver mines, strategic minerals, especially down in like the New Mexico, Arizona area. You'll compete a lot of times with Chinese groups coming in wanting to buy them. Now, let's say someone has a mine down there for 30 million. We sign a contract, we want to buy it. We get a competing bid comes in from a Chinese group. Now, I have to go out and raise those funds. So I got to go through investment banking contacts. Sometimes that might take a couple of months even. If it's a large deal, if it's a $50-60 million mine you want to buy, it could take a while. The Chinese, though, have somebody just opens up their checkbook, the government, and gives them the money. So you've created a situation where it's not capitalism on an equal footing. So I think that's something the United States really should address, how we allow a country like that to spend. Where is their funding coming from? Is it coming just simply from a government entity? And that's what's happening in China. The Chinese are telling their people, go out and find these things because we need it for our Belt and Road. We need it for our electric vehicles. They want to own the electric vehicle market. They are set on trying to own 70-75% of that market. And they know by owning the minerals and the metals, they can do that. So that's why they're out looking everywhere. But we need to have an equal footing when it comes to the mining sector and how you do investment banking and where the funds are coming from. And, at some point too, from a strategic point of view, do you want a foreign power that maybe isn't friendly to the United States coming in here using their government funds to buy up your mines and your minerals? They're doing the same thing with farmland. How unfair is that? A Chinese group comes in with Chinese money from the government and just swoops up 1,500 acres of farmland. And here's the guy in the United States going to his bank, and the bank saying, sorry, I can't do anything for you. And that's not a fair fight. So the government will have to address that at some point. I think some point soon, because we saw what happened with the supply chain right now with food. That's a big issue. Now, if you don't control your food supply, you run into a problem. That could come up all the time. What would happen if we got into a war or a battle with China and they just chopped their supply chain completely? How do we survive? I grew up in the 70s. I remember the oil embargo from the Saudi Arabia and the Arabs. You had lines of people lining up, and what a mockery that made of our economy. We could not even run our own economy without begging someone to give us their oil. If you give up control of your food supply, you're going to have the same thing happen, only this time it'll be food, and that'll be worse because then you got people. You go 2 weeks without people being able to go to the grocery store. Around here, you'd have a big problem pretty fast.
Yeah.
So those are all issues I think the government's going to have to address. But at this point, I think the government's starting to wake up to the fact, the Chinese did a good job in the last 20 years of grabbing rare earth materials. And now we know why. And now I think the United States, Canada, Australia are waking up to that and saying, okay, we can work together. We can create initiatives to get people out there. Maybe we can do kind of what the Chinese have done. We'll create a government fund that'll give you a very low interest rate loan package to go out there and develop that mine and get it back in operation. I went into a mine out in Arizona, fluorspar mine. It had been closed in the mid 70s. It was like a time warp. You walk in there, old Budweiser cans with the pull tops on them. Newspapers are sitting there. The town had a real bad fire, burned down about 50% of the mining buildings back in the 70s. And the owner of the place just threw his hands up and gave up. locked this place up and walked away. And so it's been sitting there for 50 years. Now here's a fluorspar mine that we consider a generational mine. It should be around for at least another 50 years in operation. And all it takes is about 12 months of renovation. And it has a mill that goes with it right down the road. And same thing, about 12 months of renovation. Those are the things we can do all over the United States that don't require, a 10-year commitment to get it up and running. Here's a mine where it's already been mapped, it's already been tested, it's in the ground, and there's enough material there to pull out of the ground for 40 or 50 years. We get those things back up in operation, we won't have to lean on another country and beg them for the rare earth materials. Because that's the thing too, in a fluorspar mine, typically you get a lot of rare earth materials that run down the sides of the veins of the fluorspar. So it tends to be a fluorspar and a rare earth mine. But there's lots of stories like that. It's amazing. Around between Canada and the United States, I must have looked at 200 mines. And a lot of the stories were the same. You had mines that were sitting there, maybe a guy took it about 90% to completion, and then he died, and then the kids didn't want it. So they just locked it up, and now they're selling it. Or the sadder part, he did all that work and got to the end and then ran out of money and never had the cash to get into development and actually start digging. So I saw a lot of those stories. So there's a lot of mines like that, especially if we had a little bit of government help on the funding side. I think you'd see a lot of mines come back into production that are already there. So it's not like you're turning a green field into a brown field. I mean, it's already a brown field. It's an old mine sitting there, but it means making it useful again. So I think there's enough opportunity between the United States, Canada, and Australia. We could do a good job at leveling the field on the rare earths and the strategic minerals over the next 5 years. I think we could do that. Bigger problems are longer term, and a bigger problem though. These electric vehicles, there's only so much material out there. Looking at nickel, cobalt, lithium, there's only so much available. Unless we do a better job at digging it out of the ground, I think you run into a real supply problem there, even 2 or 3 years into the electric vehicle shift over, where they're not going to be able to make additional cars because they're just waiting on, like right now, we're waiting on, there's a chip shortage, basically shutting down parts of the auto industry. I think you'll run into the same thing, but it'll be a minerals problem. Now, Elon Musk is trying to get around that. He picked up a nickel mine. I know he's looking for some other mines. I think that's what will happen. You'll see the guys like General Motors and Tesla, they're going to go in there and try to buy their own mines because they want their direct supply. But what some of those people don't understand is mining. If you're going in there and let's say you find a giant copper mine, you say, okay, that'll solve our problem on copper for our electric vehicles for a long time. But a copper mine can take a long time to develop. Let's say it takes 5 years to develop the thing. Well, that's a long time before, what are you going to do in the next 5 years? You still got to have materials to build those cars. Now, if the Chinese are the only people sitting on a stockpile of that material now, that's how they plan to grab the market. While we're sitting around trying to build our stockpiles, they've already got them. And if they can grab 70, 75% of the market, they can turn China into, Detroit, what Detroit was. And that's the real danger. Once they've got it, how do you ever get it back? You might lose it. And that's a huge market. As the world shifts over to electric vehicles, that's a lot of business. So I think that's a real risk. Mining is probably the biggest risk right now to the electric vehicle and to the entire green movement. And that's part of, I think people don't really put enough emphasis on. If you want to become a truly green economy, you're going to have to mine. Now, maybe find the most ethical ways of mining. But I mean, you're going to have to mine a lot of minerals and a lot of metals.
Yeah, definitely. I think one thing that we've seen as well is a lot of it's processed, like the rare material. It's actually processed in China. I think it was sort of 80 to 90% at one point, and now they're trying to move that to the US. But as you said, there's a lot of investment involved, and it takes years for that to actually be able to happen.
You see it up through the whole chain, even in the food market right now. I mean, we ship our chickens to China to process them. They send them back here. How in the world can that go on? And that is one advantage, I suppose. At some point, if the dollar does decline and the yuan goes higher, companies here in the United States will say, okay, it's too expensive now to ship it. We'll start doing it here. And that makes more sense. I mean, you have to have your entire food chain control. You have to have your entire control of your minerals and metals process. Otherwise, you can't control your own economy. And then you're begging somebody else for help. and you can't do that. You have to be a sustainable country, and that's part of owning gold and silver. When I talk to people about why do you want to own gold and silver, well, it's because I never want to have somebody else's boot on my throat. I want to be self-sustainable. I want to wake up every morning and know I'm fine. I'm not going to lose everything tomorrow. If everything goes crazy, hope it doesn't. But if it does, we're not going to die. And that's the whole idea. Make yourself and your country sustainable long term. And right now, the debt load in the United States, that tells you right now, they're not going down a sustainable track. They're just not. They're heading us down a track headed for disaster. And I think maybe that'll be the wake-up call. And then people will come back around and say, okay, now we invest in hard assets because that's something that will be sustainable and real. And we've all seen the differences. You look at a skyscraper in New York City that's been there forever. It's made out of stone. And then you look at some other flimsy house that's made out of plywood. Which one's going to last? 50 years from now, the stone's still going to be there. The plywood's going to be dust. That's the same with your economy. You have to make a sustainable economy long-term for your citizens. And we've gotten off track of that, but we'll get back on it. It'll be a tough turnover, but we'll get back to it.
Yeah, definitely. So you sort of mentioned there, obviously investing in mines and, different types of mines. So if someone wanted to do that, obviously I'm sure there's quite a steep learning curve, but what should they be looking out for really?
First thing is I'd make sure that the mine had a 43-101 in place. Because what you'll find, you can talk to 200 mine owners and all 200 will tell you that they hit the mother lode. It's the greatest mine in the world, and that's why you should buy it. Because they own it, they want to sell it. Or they own it and they just love it. But if they have a 43-101 in place, that's an independent geological testing done on the entire site. And the independent part is the important part because they're not going to put their careers at risk just to help some guy sell a bad mine. So that'll type out everything to you. It'll tell you exactly what's in the ground. And that's an important feature because I remember when I first got into mining, someone locally was talking to me. They were kind of laughing. They made it sound almost like it was wildcatting for oil. They had this idea like I was walking around a field with rose petals and a stick, trying to find it. And it's the opposite. You'll go in, let's say there's no 43-101 in place. The first step you would do then is you'd go in, you'd have to pay probably a couple $100,000, depending on the size of the site, for independent geological testing. And they'll do well tests all around the site. And they'll come back and they'll tell you, okay, this is exactly what's in the ground and this is how far it's down. So that's the other part that's kind of tricky. You'll have a guy advertising his mine and he might say, I've got $1 billion worth of gold verified here in the ground. But then you do a feasibility study on it and you find it's going to take $1 billion to get it out of the ground. So there's no money to be made in it. So why mine it? So you need to do that. If you have a 43-101, the first thing I do is I try to find places with 43-101s in place because all the work's already been done for you. And it's all right there in black and white. You just go through it. Sometimes there are 50, 60-page documents, and it outlines every little piece about the mine, the good and the bad part of it. Then after that, I think you have a good idea of what's in the ground. Then the feasibility tells you about approximately how much cost it will be to get it out of the ground. And I've seen mines you could mine as low as $250 an ounce of gold that were very low cost, tightly run small mines. The big ones, Newmont, Barrick, you might be more like $1,100, $1,200 an ounce because of the size of the business they're doing. I would say the average guy, the way to do it is, say you had 10 people and you said, hey, let's each throw 100,000 in or throw 200,000. That gives you a couple $1 million. You go out and you buy maybe 10%, 15, 20% of a mine, and you be a direct owner in that mine. And the only way to do that, you can contact a broker. I'm sure they can find it for you. But a lot of the mine sites are listed, so you'll find tons of them. There's tons of permitted mines out there ready to go. And then it's just you doing the legwork. Like I literally looked at about 200 mines. So you got to do your legwork because the last thing you want to do is say, okay, we're ready to pull the plug and go for it. And then you buy a mine and you find out, you bought this, just a piece of land. The land itself probably isn't really worth anything. So you got to do your homework first. And then in a mine that doesn't have a 101 on it, your risk then is the geological testing. And I've seen small testings that only cost you $4,000 or $5,000, and they do limited ground testing around it. But for actual well testing, you're usually talking $200,000 or $300,000. So in a case like that, if you had 10 guys going in, maybe each guy has to throw 10 or 20,000 in for the initial testing. Now, if that all verifies out, it says, yes, this is a good mine, then you pull the string, you go for it, you buy it. Um, Plus, if they need to bring funding in to help them buy it, now they've got the test results in their hands that they can take to the investment bankers and say, look, we can get this. We want to retain 15 or 20% of it for our guys. You guys do the funding on it. You can retain so much equity for yourself. And based on the cash flow from the mine, we can pay you back in this many years. And that's how you go out and bring investment money, banking money into it. But I'd say, the easiest way for the normal guy in the street to do it initially. Get on the mine site, start looking for permitted mines that are for sale, and then start going through them. And I would say the first thing I would do is look for the ones that only have 43-101s in place. And especially if you're a novice investor, this is your first time, I wouldn't venture outside of that because there's just too much noise, carnival barkers, and you don't want to get into that. The 43-101 will speak for itself. You can meet the owner, talk to the owner. If he's a great person, she's a great person, fantastic. But the bottom line will be the real meat and potatoes will be inside the 43-101, and that's what you need to go through. So I'd start there.
Yeah, definitely. And you obviously mentioned the US there, and you've mentioned Canada and Australia. Are there any other sort of countries that you're watching along with those?
Africa is kind of exploding right now. I haven't done any business there. We've talked pretty extensively with some people in Uganda. It's a little tough because logistically, especially with COVID, here I'm able to go look directly at a mine. Going into Africa, it's a little tougher right now, especially with before you had we had an Ebola breakout a couple of years ago, and that kind of shut things down. But that's a continent that could just explode economically. They've got everything they need in place as long as they can hang on to it and not let another country come in and exploit them. But they've got it all. I mean, they've got land, they've got people, they've got natural resources. The gold, silver business over there, it could be tremendous. It needs more regulation. You got to know what you're buying. There's all those stories out there. Some guy flew in and got kidnapped. Some guy flew in and has money stolen. You got to cross your T's, dot your I's. You got to assume that there's a problem and make sure you cover your own tracks. But the upside there is big. I mean, there's some mines out there that are producing a lot of gold and silver right now. I think most of them are running their gold and silver probably through Dubai right now. But a situation like that, where maybe a group got together, you formed your own group of 10 or 20 people, threw money in, and you bought into one of those mines. Yeah, I think there's some upside to it. I probably wouldn't do it if I was a new investor because I think the risk is just too much. And it's just too hard for the normal guy to get on a plane, fly to Uganda, go out and meet the people at the mine, and actually know that you're being told the truth. Whereas here, if it's in the States, you can drive your truck right up to the mine site, meet the mine owner, meet the employees, walk down in the mine if you want to. You can bring your own geological testing group in if you wanted to. It makes it a lot easier for you. So I would probably stay away from some of those places right now, even though the upside is huge, and maybe wait until you got your feet wet a little bit more and then branch out into that. But yeah, I mean, as a continent, I would say Africa has everything they need to really take off. But everybody knows that. So I mean, the Chinese are licking their chops. The United States is licking their chops. Anybody who wants to get in there is already really looking at it. And a good example, like we looked at some mines down in Peru, and all around us, it was like the United Nations. You had Australia on one side of us, on the other side, you had like 4 different countries all around us. The Canadians were there, the Swedes were there. So I think when you get into a good mining area like that, you'll see just about every country in the world showing up. Africa is tougher, but there are people that are going to make fortunes there in the next 5-10 years because the upside is huge. I wouldn't, if I was a novice guy, I wouldn't start there.
Yeah, definitely. I think you mentioned there as well, China, and I know the Belt and Road Initiative. That's a big, look at the Middle East and Africa. Those are sort of the big focuses of that, aren't they?
Yeah, honestly, I like the Congo. I think if the Chinese could make that another one of their Chinese provinces, they would, because the raw materials there, the rubber, everything else they can pull out of there is, just tremendous natural resources. And they know, like the United States needed oil in order to drive our economy, so we cut a deal with the Saudis years ago. The Chinese know they're going to need raw materials to drive their economy. So if they can cut deals where they closely align themselves with places like Uganda or Sierra Leone, any of those places where they can, like the Congo, where they can go in there, take as many of the natural resources as they can, they're going to do it. That Belt and Road initiative of theirs, that's a roadmap for it. I mean, that's exactly what they want to do. They're looking at Afghanistan the same way right now. I think they're going to find out it's probably tougher to do it in Afghanistan. Otherwise, I'm pretty sure we would have done it. Because if we thought we could walk away with $1 trillion worth of minerals in the last 10 or 20 years, I'm pretty sure we would have. But it's there. But the question is, do the people that are there really want to have a normal society where you can do that? And I don't think they're going to allow a foreign power to come in there and mine aggressively. But yeah, they might, at least for a while. And if they did, it would be a huge bump for China, because and the other part about it, it would put a tremendous amount of pressure on India, because now all of a sudden you've got the Chinese basically partnered with Pakistan on Afghanistan, and you're going to have them right on your doorstep. And that could be, you start looking at geopolitical things, that could be a real big problem. At least with the United States there, it did put a buffer in place between Russia, China, and Pakistan, which now you have a direct straight line right to India. So if I lived in India, I'd be very concerned about the changes we've seen lately. And I think I'd be watching my borders, especially Kashmir. That could be a real flashpoint.
Yeah,
but the mining opportunities there, if you could ever get the thing straightened out to allow people to work, Afghanistan has a tremendous upside. North Korea has a tremendous upside. I mean, how insane is that? You look at a country right there where their people are starving, and yet they're sitting on probably trillions, not just that trillion, right? Trillions of dollars of rare earth materials in North Korea. Why they don't develop that, I don't know. It's hard to fathom when you see stories about people that are starving, and they're making deals with the United States for food. Why do they do that? Why don't they just develop their nation? But I think the problem is, to do that, they'd probably have to bring in some mining experts from around the world. They'd have to invite the Australians and the United States and the Canadians in, and maybe they just don't want to. So instead, they let their people starve. Doesn't make a lot of financial sense or sense as a human being. But yeah, I mean, you look at Afghanistan and North Korea. Both of those countries are sitting on massive amounts of rare earths and minerals and metals. So the opportunity there would be tremendously high as well. It's funny. Years ago, I applied for the job as finance director of Kabul, and I didn't get the job. And I called the girl up, and I'm like, I didn't get it. She says, no, I'm sorry. I'm like, I didn't think anybody else would be dumb enough to apply. but yeah, she said, actually, hard to believe, but a lot of people did. But that must have been the most frustrating job of all time, because you're trying to get a basic economy up and running to begin with, which there was none with the Taliban there. But then after that, you sit there and you see all the potential with the mining industry, and the ability maybe where you could convert people from growing poppies to being miners, and they start adding something to the world rather than distracting from it. But how do you get that done? It's a tough situation. Sometimes you just can't. And I think at the end, the United States couldn't. I don't think the Chinese will be. I think the Chinese will have some success at the beginning, but I don't think they're going to have success there long term. And at some point in time, it's going to have to be the Afghani people that rise up and say, we're going to have an economy and a normal life, and we're going to have universities and schools and houses. And that's when I think they'll make the decision to go ahead and mine the place and create a real mining power if they wanted to. But until that day comes, they're just going to be a minor speck on the world as far as mining goes. Same thing with North Korea. I mean, they're not going to add much to the world as far as mining goes until they make the decision to do it themselves.
Yeah, well, I guess when that demand really comes and the shortages really come, then I guess that's when it might have, the benefits might be too good to miss out on, maybe.
But you don't know. I mean, the Taliban, the way they have thought in the past, maybe they've changed, but again, I doubt it. They weren't necessarily motivated by things like that. Their motivation was completely different, sometimes religious. And so even if we get into a period like that that's extremely tough, it may not be the trigger for them to say, okay, let's open up the economy, let's do something. They may not. It may be another whole cycle where 10 years from now, the Afghani people have had enough and they rise up and take their country back. And then they decide, okay, now we're going to make our own decisions. The United States is not going to tell us. The Taliban is not going to tell us. We're going to tell us, and elect their own government, set up their own economy, and then finally go to work. Unfortunately, it'd be a lot of bloodshed between now and then to get to
Yeah.
that point. But the
Yeah.
upside would be huge. If they could do it. Same thing in North Korea. That could be one of the richest nations in the world if they made the decision, to join the world. Stop cutting yourself off, stop torturing your own people by starving them, open up your economy. But I think they're so distrustful right now of everybody. They think everybody's trying to kill them, everyone's trying to take them over. I just don't see it happening for quite a while. But both of those countries, including Africa, those three areas, if they ever decide to really go after it, there's huge upside. I'd say between the three, Africa is farther ahead and ready to go. And I've spoken to miners over there recently, and they've got mines. Specifically, I talked to a guy in Uganda here last week. They've got mines ready to go now that are already producing, and they've got dory, and then they're fighting right now to find buyers. So that's how it works. They'll pull gold out of their mine in Africa. They'll find a buyer. That buyer then takes that over to the refinery, usually in Dubai. They'll melt it down. They'll make it into bars, and then he's able, he either keeps them or he sells them. But that's the process for now. I would imagine at some point Africa will have their own refineries in place over there, and then Dubai will be looking for business someplace else more likely. But for now, that's the process. So at least they are producing gold and silver, whereas in Afghanistan and North Korea, they're not really producing anything.
Yeah, and I guess that's where sort of the benefits, the country benefits even more when they're not only mining it, they're producing it as well, and then more people are, as I said, benefiting.
Right. Then you control the whole system. The miners are being paid to mine. The owner's making money. He's buying it. He's selling his gold and silver. You take it to the refinery. You got a whole group of employees working there. You got an owner of the refinery who's making a lot of money, and then they turn around. And of course, what do? They go buy a house from somebody. They go buy cars. They buy cars, planes, and it fuels the whole economy. So if you can keep the whole thing right there in house rather than shipping it out, you make a lot more money, and you're able to keep a lot of your own financial business right at home. And I think Africa's not there yet, but I think they're going to get there. In the next 5 years, I think you'll see a lot of gains in Africa. It may become a place that's really that a lot of people are looking to invest in. It's a little dangerous right now, but I would say if you can get in there and find some mines and you're comfortable with the people you're working with, the long-term upside is tremendous.
Yeah,
and they certainly have the resources. There's no doubt about it.
Yeah, definitely. So I'm going to sort of change tact a little bit. So I'm going to just going to ask, sort of, what are the greatest lessons that the market have taught you in your career?
Pretty simple. Don't get too high. Don't get too low. When things are, look at Bitcoin, for example. When things going up, everybody. It's funny. I'll go to the gym, and there's a lot of college kids there at the gym, and they're all putting money in Bitcoin. And you'll hear them when it's going up, they're all talking about it. Every person walks by, you hear them saying something about it. And then of course you get a correction, and poof, and they get creamed. But yeah, I would say if you're investing in quality, if you're investing in the S&P 500, if you're investing in gold and silver, don't worry about the day-to-day moves. If it goes down, it's okay. Every month go in and buy a little bit more, keep stacking it up, keep adding to add your equities on the S&P 500 if that's what you want to do. Add your investments in gold and silver. But don't get too excited. Don't get too overextended. Stay off of margin if you can help it. Try not to leverage yourself out, because in a down market, that's the only person that really gets killed. The guy that's on margin and is forced to sell. But if you're just holding your equities, you hold them, you ride it out, it'll come back. You'll be fine. And same thing in gold and silver. Just stick to that same model. Don't get too excited. Don't get too down. At the end of the day, just put in your 16-hour work day and go on.
Yeah, and as you said, it's sort of a long. Most of us have 20, 30, 40 years to invest. So, one day or 1 year won't really affect it, will it?
That was always the first question I asked a potential client. I worked for Morgan Stanley for years, and when you sat down with a person and they had a chunk of money to invest, the first question I'd ask them was, "What's your time horizon?" I mean, because if you have less than 3 years, we're not putting it into the market. It's going to have to go maybe even just a 3-year CD or a 3-year bond. But you've got to have a minimum of 3 to 5 years to put your money into the stock market. Now, with the market at this kind of evaluation now, you might even stretch that out and say 5 to 7 years, because it's possible you'll run into 1 or 2 years where you get creamed and the market goes down 30%. And so you want to have that time for it to come back all the way. But That was always the most important thing. Someone asked me one time, what's the best time to put money into an investment? And the question really came down to there was none. The most important time was when you had money and you had time. Those two things. Do you have money and do you have time? Uh, if the money is sitting there and it's for your son to go to college in 2 years, and you put it into Bitcoin, you're crazy. You might as well, you're throwing a dart at the board because you have a feeling that it's going to go higher. Well, that's just nuts. You need the money in 2 years. Leave it alone. Just let it sit there. The flip side of that, though, is if you have retirement money sitting there, you say, "Hey, I want to take 10% of that, put it in Bitcoin because I think in 10 years it'll be 200,000." Okay, now you're making an investment decision. You're using a piece of it. It's just part of your diversification. You go for it. So I think the most important lesson of all would be look at your time frame, not necessarily the market first. And if you have the time, then you take the next step. You say, okay, now what do I want to invest in? I would do that process.
Yeah, definitely. And I think you mentioned Bitcoin there. It's sort of called digital gold. What are your thoughts on it? If you maybe talk about it a bit more.
I'm not sure why they call it digital gold. I hear that all the time, and it doesn't make sense to me because to me it's a tremendous trading vehicle, whereas gold is a tremendous investment. One you buy and hold and just stick away, and the other one you trade. Uh, I don't see that it's any different than fiat because I don't see that it's a true store of value. Because if you ask somebody, okay, tomorrow the whole economy falls apart and you own a Bitcoin, what do you have? Oh, I've got $47,000. But what's it backed by? Where is it? If the system, if the banking system's in trouble, if the internet happened to go down, if any of those things were to happen, how do you get your funds to save you and your family financially? If I own physical gold and silver, if things got that bad, I could always barter. You could always take a bar of gold and go out to a farmland and buy yourself a side of cow, and that might feed your family for a winter. There's a lot of things you could do if you own your physical metal in your hands. Bitcoin, you just can't do it. So to me, it's two different animals. Whether it becomes a full-blown currency in the future, it might. That's a real possibility. How it would differ from a fiat currency that we have today would be the bigger question for me. I mean, it's decentralized, so it takes some of the power away from the central banks and the government. So that probably would be good. But how that would stabilize currencies in the future, I'm not sure. You might have wild swings in currency prices, and I don't know how that would help anybody. Yeah, you look at an example like that where Bitcoin went up to 47,000. What if you turn around in 2 weeks it was 35,000? And it could be. Well, now all of a sudden you're sitting there like the guy in Germany with the chalkboard, changing the prices of coffee because Bitcoin happened to go down 5,000 that day. So I think the fact that it's got that much volatility to it will stop it from being a worldwide currency for now. But you could have 5 years, maybe that'll start to go away, and some of that volatility will start to go away as it becomes wider use. So it's got a real potential as a currency, but it does not, to me, have a potential as a store of value.
Yeah, definitely. Well, Tom, thank you so much for joining the What the Finance podcast today. I've just sort of got one more question. So, what is one message that you'd like people to take away from the interview?
Make yourself self-sustainable. Look at that model. Everything you need to do in your life to stay self-sustainable, do it. If that means you put a root cellar in your house, you put all your canned goods down, or so you say, hey, look, I've got enough food, I've got enough energy for 6 months, do it. That doesn't make you a prepper, it just means you're self-sustainable and you can survive a problem. Do the same thing with your investments. Have enough investments in gold and silver, hard assets, that if you run into a problem in the future, you'll be just fine. And even if that means you just have to buy yourself 6 months to a year, that 6 months to a year could save your family, save your home, save your property. So everything you do, try to be self-sustainable where you can control your own outcome.
Perfect. Thank you so much. So if anyone wanted to hear more about yourself or maybe get in contact with you, what would be the best way?
LinkedIn's usually the easiest way to get a hold of me. And anybody is welcome to send me a direct message there. I reply to all of them every night. So within 24 hours, you always get a message back from me. But that's the easiest way to get a hold of me, just on LinkedIn.
All right. Perfect, Tom. Thank you so much.
Yeah, thanks for having me.
Thanks. Thank you so much for listening. And if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.